Political activities tend to affect macroeconomic performances in any economic system. Welcome to another edition of the Nigerian Investor. Last week we talked about the stock market, election postponement, and the economy. Today we want to look at election postponement and how the markets have fared so far. Almost 10 days after the general election was postponed, the announcement has continued to generate reactions and comments from market stakeholders and international observers. The effect of the postponement on the stock market in the first 1 week has turned out to be massive, as 10 blue chips are reported to have accounted for about 82% of the 800.74 billion losses recorded last week. Based on this fact, we can deduce that the sectors like industrial goods, financial services, consumer goods, and oil and gas sectors were the most affected in the loss, while NSE share index recorded 8% loss within the period of review. However, as we start a new week, equity market has been recording positive outlook as it closed in the green zone with 3.14% gain recorded in 2 consecutive trading days, while time will tell if the current tempo will be sustained. Also, the foreign exchange market continues to gain its own side of the heat, as the naira currently exchanged for 214.50 kobo to $1, about 2.14%, up from the 210 to $1 it was when the postponement was announced. The NIBOR overnight rate, which was around 16% on 6 February 2015, has moved up and is currently at 93.12% according to data on FMDQ website. The following companies are expected to hold their AGM soon: Nimet Pharmaceutical PLC on the 24th of March 2015 and Nigerian Bureau PLC on the 13th of May 2015. On corporate actions, Nigerian Bureau PLC recommended a 350 kobo dividend with closure date set for 5th of March 2015. On announcement in the market, Seplat cancels possible combination with Afrem PLC. Seplat Petroleum Development Company PLC has notified the exchange of the announcement made by Afrem that it has decided not to agree to Seplat's request for a timetable extension in accordance with Rules 2.6a of the UK Takeover Code. ETI pursues legal appeal against former CEO TNI. Ecobank Transnational Incorporated, parent company of Ecobank Group, has notified the Nigerian Stock Exchange that it held a special meeting in Accra to discuss recent court judgment in Côte d'Ivoire and Togo. This judgment awarded over $26 million to the company's former CEO, Mr. TNI, whose appointment was terminated in March 2014 after he had spent less than 2 years in the position. SEC approved new rules on complaints management. As part of the new complaint management framework in the Nigerian capital market, the Securities and Exchange Commission (SEC) has approved new rules on complaint management. The new rules recognize registered industry trade groups and self-regulatory organizations as important part of the new framework. Consequently, all market operators are hereby directed to register as members of their respective industry trade groups, as henceforth investor complaints shall be handled at the trade group level. Only complaints that remain unresolved at the trade group or self-regulatory organization level shall reach the Commission for resolution. That's all we have for you on this edition of the Nigerian Investor. I remain your regular anchor until I come again next week. Bye for now.